All right, Vijay Sanghavi is now joining us, MD and CFO, Ratnaveer Precision Engineering. Vijay, thank you very much for your time. Good numbers this time round, which makes me, take the discussion forward on how sustainable are the growth numbers here. Do you expect the full year to be very strong? Can you give some guidance on that note?
Yes, thank you, Ajay, to connect us. And I can just give you a highlight that the company has been reported 205 crore as a top line, which is a year-on-year 73% growth into the top line. And the growth would be also into the PAT and the EBITDA per ton also been growing. So this could be a consistent for the company. Last year also that we have been given the numbers that the company's performance would be increasing with the 26 to 27% of CAGR. According to this, company has been performing and it can be rewarded to the market itself. And it could be definitely order books are very, very strong. And looking to this order book strength, this proportionate ratio will be continuing throughout the year 25. We have been projected for 720, but we could be estimated that it can be goes to the about 30% of the CAGR growth to this year.
All right. So, is it proper to assume that you may do a full year revenue of closer to 750, 800 crore with a 12% kind of margin? Is that fair estimate?
Yes, the margins, the order books are very strong. We have sectors like defense, aerospace, automobiles, and the very large sectors of all the engineering companies, and the company having a different kind of the product mix over there. Company's capital expenditures are also been coming up as per the company has been reported that the first phase of the capex would be completed almost 75%, and would be second phase of the capex we could be started from the December itself. So all this revenue would be coming from the value addition into the product, and the variety of the sectors company would be aggressively studying. So the margin of the bottom margin and the PAT profit would be increasing year on year, and you can see this could be converted into the results itself.
Your revenue mix looking like finishing sheets 47%, washers 23%, solar roofing hooks 5%. Where exactly is the highest growth coming from?
Sir, it could be highest growth would be reported into the washers and the circlip business, as well as into the defense sectors where we have been very aggressively moving over there, and we have been targeting to the new orders according to this. And also the bullet train project, railways, long transportation are been a very core sector area for the company to be established. Companies also establishing into the entirely core activities. So the main area would be looking into the entire business model over there, and company would be maintaining that profit with the 6 to 6.5% profit for this current year itself.
Vijay, thanks very much for joining us on the show. That was Ratnaveer talking about the strength to be sustaining for the full year.
If you like this video, then like, share and subscribe to ET Now.